All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. A lot's going on out there, so let's go get to it. First things first, take a look at the Honeywell option, $1.27 to $1.47 on the spread there, and that tells you what the market's doing right now. Right, it is pretty crazy in terms of what is happening here. So I'm going to put in a limit order for let's see, $1.36 and see if it fills. Let's say it's probably not in a market like this. They're probably not going to fill that. Do want to get something a little. You can just see what that order did to the overall spread, right? I mean, it just this type of movement in a market just absolutely creates a fill price nightmare, which is something I will address here. But let's go change it to $1.31. Let's see if they'll fill it at $1.31, and they're not going to fill it at $1.31, right? And you kind of see, this is a an element when it comes to the market of, hey, market makers, they don't want to get caught. They don't want to get caught upside down, right? They don't want to get caught upside down. They don't want to be outsmarted, so there, I'm out at $1.31. So it took a second, but $1.31 on Honeywell as it is hitting our time stop and breaking my price stop here as well. So let's come in here, $1.31, and close that out. And this will be the worst trade of the challenge here so far. In terms of the gain loss, and in terms of the percentage lost there for Honeywell. And then let's go take a look at a Valero here. Now, Valero is trading. Let's come and get the option price here. That takes care of Honeywell. And it's probably going to bounce into the close, if you'd ask me. But anyway, Valero trading here at about 280 is about where that is sitting right now. Now I'm going to do something just a little bit different. I'm going to go off script for the challenge. And this is going to be the first time where this whole challenge where I've gone off script, and I'm going to go and I'm going to sell my Valero position. Okay, and here we come. I'm just going to sell at 273, see if they'll fill me. Probably not. So I'm just going to go market order and pop that in and see where it fills me. 271. 271 is my fill price on a Valero. So I'm out of Valero here as well. Okay. Now, we end up with a wash on Valero? Yeah, a wash on Valero here. But 267 was our entry, 271 exit here on Valero. Let me make sure the alerts went out, and then we'll go talk about it all. All right. Looks like it is out, and there we go. All right, so challenge is in all cash, and you can see the numbers here on the challenge. We're still running with just under 12,000 in total gains, and challenge just under 15,000. So instead of getting that push to 20 grand, we've fallen back a little bit here to about to just under 15 grand here for the challenge. Now, think about today, and this is all, well, let's go with what's going on. We had a Trump tweet, so if we go to Twitter, President Trump, right? We just look at his Twitter feed here. It's a series of 4 tweets. Our representatives have returned from China where they had constructive talks having to do with a future trade deal. We thought we had a deal with China 3 months ago, but sadly, China decided to renegotiate the deal prior to signing. More recently, China agreed to buy agricultural products from the U.S. in large quantities, but did not do so. Additionally, my friend President Xi said that he would stop the sale of fentanyl to the United States. It's a powerful opioid, if you're not familiar with that drug. This never happened, and many Americans continue to die, which is, come on, is that, well, never mind. Trade talks are continuing. During the talks, the U.S. will start on September 1st, putting a small additional tariff of 10% on the remaining $300 billion of goods and products coming from China into our country. This does not include the $250 billion already tariffed at 25%. We look forward to continuing a positive dialogue with China on a comprehensive trade deal and feel the future between our two countries will be a very bright one. First things first, this is not President Trump in terms of just what we have heard from President Trump when it comes to tariffs. They've been big, brash, bold. This is very political, throwing the jabs in, but then smoothing things over. My friend, positive dialogue. And I think this may be something that kind of catches many people maybe a little more off guard than others here. But this is what came out about an hour ago. And what happened here, and let me pull up the 1-minute chart of S&P futures, is you can see that futures the market went from being right back to where it was before the Fed. Magic. It's amazing how often it happens where, we get a Fed reaction upside downside and then it just goes back to where it was, before the Fed in a day or two. It's just so normal. So we saw a nice charge in the market. And then take a look at the volumes. Check out these volumes. Look at that big volume surge compared to what the morning volumes were. And it has been a heavy, heavy drop, which makes yesterday's drop look smaller. Right, this has been a bigger drop than what we saw yesterday, and one that definitely brings in even more questions than what we saw yesterday. No, market's only down 30 points, somewhere around there, as it sits. But if you think about, you have to think about a couple things. One is retaliation from China, right? Another is, how are they going to respond to this? Is there going to be a continued escalation like what we have seen? And then the other thing you have to kind of take into account is the fact that we're seeing a big move here in bonds, where bonds are pushing up to new highs. And this is something where we haven't seen bonds move on a fear trade here in quite some time. And what we are seeing in bonds right now is a fear trade. In fact, we're seeing gold rebound sharply. And yes, the dollar has weakened, but gold is rebounding in a fear trade element. If you look at the VIX is pushing up to the highest it's been since, the market bottomed there at the end of May. So this is a big thrust in the VIX here. On the day, it's, from its lows or where it was. I mean, this is one of the bigger moves that we see in the VIX. And so it comes down to what? Right? It comes down to what? If you look at for the challenge, why did I exit Valero? Honeywell, yep, had to exit. But why did I exit Valero? Because the option values are highly inflated right now. If tomorrow we wake up and the stock is up 20, 30, 40 cents, the option is going to be red. Even if the stock's up 30 or maybe even if the stock's up, 80 cents to $1, the option's going to be red because we would see a pullback in the in the VIX and in the option value there, relative option value. And so going in, the risk just very, very high, and not something I'm willing to take here at the moment. So I did step in. I did sell Valero. I will put a note in here about this being a Jeff veto, where I just said I gotta go. I gotta leave. I gotta move on out. And you'll notice I will not do that very often. I will only do it under very extreme circumstances. And this is something where the option value could easily be 20% lower based on the move in the stock. And so just pulling it off, and moving on. In fact, Honeywell should probably be down about 65 to 70%. We ended up with 50%, and some of that is the implied volatility helping. So, the implied volatility risk if the stock goes our way, the risk of the stock going against us with everything else that's out there, and decided to take it off. We're also on day 60 here, so tomorrow I will be releasing the numbers here for the challenge in terms of the performance metrics and everything that we have seen since day 30. It has been a slow, steady grind up. This week, though, has been a splash down. We're pretty much neutral pretty much since Intel. So no real gain, no real loss here since Intel, and that's kind of what the month of July has been. And we've seen the month of July in the S&P be extremely flat. And yes, there have been a chop up or a chop down. This is a pretty sizable chop down here in the last 2 days, but we have some pretty big volumes coming in. I'm very interested to see where some of the market metrics go, but I think there's a risk out there tonight that hasn't been in the market ahead of the Fed. I don't think it was ahead of the Fed. I don't think it's a risk that has existed in the market until today, and I do think there is a crash risk. And, anytime I say the word crash, I get, emails and texts saying, hey, what should I do here and here and here? And when I say crash risk, right, anytime crash risk is high, we're talking about 10% chance. 12% chance, right? So even though crash risk may be higher than what it is, where it goes from pretty much a no chance up to 12, it only goes up to like 10 to 12%. We're not talking about a situation where that is the likely outcome, okay? But I do think that right now the risk of that is significantly high. And yes, the whole idea of investors don't really have anywhere to go other than into stocks, right? It's still there, and that's still going to come into play. But it doesn't, mitigate crash risk or something like that when we have a change in the game, right? And that's what Trump's tweets are. They're a change in the game. And they're a change in his tone, they're a change in his language, and that's not something that is necessarily a positive. It's something that is going to drive more questions, a higher wall of worry, rather than calm things. Right? We talked about Under Armour's earnings. Right, and the CEO and the statement the CEO made, and I brought it up and I said, hey, you know what? All you have to do is look at the CEO's comments, and the stock's going to be down big. Right? It was all just kind of fluffy language, confidence, niceties, without a whole lot of specifics. Now, with the tariff here with President Trump, there is a specific there, but he kind of has some of those elements of just kind of niceties and trying to dampen the blow almost. And let's face it, the market sees past that kind of stuff. It just is a reality of things. So. That's what's happened here this afternoon, and this is where the challenge sits. Now, tomorrow I'm going to talk more about the challenge, and, I'm never happy to see trades lose. I hate it, right? Absolutely hate it. But one of the things that I've continued to preach about this challenge structure is that it's about surviving the chop and thriving in the trend while still getting all of the benefits of the challenge. We're only having to deal with trades at 10:30 and 2:30 during a day, with not having to sit there every day and go, well, should I put a stop? Should I do this? Should I do that? And, dealing with all the anxieties that can come from being in option trades and, what should we do here and what should we do here? All the benefits of some of the some of the situational knowns, what we will do in different situations without having to deal with pre-programmed stops and exits that'll just get stopped out and go, right? And it's one of those where there are a lot of benefits in how it is set up, but one of the drawbacks with it, right, is, okay, we get the tweet from Trump, right? Could I swung over to my trade computer and click, sell, boom, and saved $800? Yeah, could have, right? Could have. Does that help anything? No, it doesn't, right? All it does is create more community angst and stuff like that, and more unknowns of, oh, well, the next situation, how's it gonna, how are we gonna react, and all of that. And so, in keeping with all the benefits that come from the challenge execution, there are going to be times where, we're going to have some losses that, probably could have been mitigated just a little bit, had we changed some things up just a little bit, or maybe had we not taken some risks that are out there. But the reality is that the way the challenge is built and the way the data, has come in over the last 3 years, we're going to have, on any given challenge, we're going to have a string of 3 to 4 trade losses in a row. It's just going to happen, right? And when we did the option experimentation, showing kind of which options to choose, and we used the short-term options, and then we used the longer-term options, we showed how the shorter-term options, they can't survive a downtick of 3 to 4 trades, right? 3 to 4 trades, challenge where it was, it goes. I mean, this challenge is down to $2,000, $3,000. Had we gone with the shorter term options for the last 4 trades, right? I know, had we gone with the shorter term options on some of the gainers, they would have been bigger gainers. But on a percentage basis, we still go back down just as quickly. And so, hopefully, and again, there's never a silver lining to a loss, right? But hopefully it does go to kind of reinforce the elements of the challenge here and the automation elements of the challenge. And the swings are going to happen. I can't take those out. But to be protected from, or need something really historic to kind of happen to take a challenge to zero, that's what we need. Because 1 to 2 to 3 trades, it'll put a small dent in the challenge, but nothing that can't be overcome by one singular trade. And, we'll be looking for that as we go forward here. Now, there are no new signals on the board right here. There are quite a few downside crossovers. The IBM is still an upside crossover. Well, it's not anymore, but was 15 minutes ago, but did not signal consolidation risk on it, just too high. If we look at, some of the downside crossovers. In fact, let me pull up the list. I'll show you the list here. Let's see if it'll pull it. Yeah. All right. Bank of America, right? Triple D, Disney, Juniper, JP Morgan, MGM, Schlumberger, and now Valero. So Valero must continue to be pulling back here. Not much. But anyway, if we come and we look at some of these, here's Bank of America. You can see the move, right? With the move in bonds, Trump's tweet has just absolutely decimated Bank of America here. You think about the last time that the trade war talk went sideways, went pear-shaped. When was that? Well, that was the beginning of May. and more specifically May 9th, when China halted agricultural or decided or announced that they were not going to make agricultural purchases from the U.S. as had been agreed, by both parties. You think about what happened since that May 9th time period, right? And Bank of America stock was trading above 30. When the trade stuff went pear-shaped, I mean, Bank of America stock fell 13% afterwards, right? It had a very sizable move in the 3 weeks after. And the banks are an area that can get really affected or be really affected by the trade war going sideways. And here with JP Morgan, we can see the same thing. Now, both of them had downside 3-7 crossovers, but they're coming off of new highs, right? So the first drop is not going to create a signal or a trigger. In fact, if we look at Bank of America, average true range was 0.6. So we almost have we do have a 2 average true range move here to create the crossover, and those will never signal. So not a bearish signal with those. Juniper, I thought, had a chance for a bearish signal. But talk about a stock that's had upside, downside, pretty much since since June. It's been all over the place, but not triggering there. Disney has kind of the same issue as the banks, right? It's coming off of a new high, so it's not going to create a signal, right? But we didn't see a signal on the upside here before these kind of 2 small up days, and we're not seeing a signal on the downside here on the crossover as well. Just high consolidation risk there with them. And then MGM with just coming off of new highs, right? Coming off of new highs. And, we could see, things like Wynn absolutely get plastered here for another day or two. And get hit really hard with these kind of trade war developments that have taken place here today. And then Valero, which has a downside 3-7 cross, but you can see where the Stoke 39.1 is. It's not going to create a downside signal at this point or at this level. So that's those are some of the downside crossovers that are out there, but no new triggers here on the watch list. Out of these crossovers. So nothing bearish for me to go get into, nothing bullish for me to go get into. GLD does have an upside 3-7 cross on it, but consolidation risk component on it is also very high. So I'm going to go into the close here with all cash. And we'll look to deploy the cash going forward here, and hopefully, you kind of get an understanding of how the challenge mechanics can still work through, through some of the chop and some of the grind, and because we're going to have more of it, as the challenge goes forward. And in fact, let me pull up the S&P. You think about these 2 days, right, and what they are. Compare them to this right back here, right? I mean, even compare that to May when we grinded with the beginning of the challenge, right? We have seen way more volatility in the market than what we see right now, and we're going to see way more going forward. And the challenge has been tested through these periods, and has done very well, right? It doesn't always put on gains. It's not one that's going to be in puts on all the down days and calls on all the up days, but it is one that will survive the chop and will thrive in the trends, and that's what I will continue to expect as we go forward. So tomorrow morning, I will jump on. If there's no new signals, I will go through the challenge metrics here with you. If there are some signals or something else going on in the market, I'll do another video tomorrow. I will maybe do one about an hour after the normal video time. And discuss the metrics, show you how they're kind of in line with the historic metrics. And it's something very similar to this 30-day summary, right? Where we put some of the metrics there for 30 days. I will have the 60-day summation here as well. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.